I actually briefly started my career as a lawyer at a big firm, and fortunately for me, I really hated it. It was just an excruciatingly boring experience for me. We're both introspective people, and we strive to build a firm where ego doesn't get in the way. We're on a quest to discover truth together. We kicked off our fundraise in early March of 2020, before COVID hit and the financial world basically shut down. We really didn't know what was going to happen. Our goal is to back the best entrepreneurs solving real problems in the real world.
This season of the Inquisitive VC is proudly sponsored by Carta. Carta is transforming how private capital operates, connecting founders, investors, and LPs through purpose-built software and services. Trusted by over 65,000 companies in over 160 countries, Carta supports everything from equity management to fund administration, powering nearly $185 billion in assets across over 9,000 funds and SPVs. Whether you're building a company or managing a fund, Carta is the modern infrastructure private markets have been waiting for. If you'd like to find out more, check out their website in the show notes. Welcome to another episode of the Inquisitive VC. Today I'm excited to have with us Travis Scher, co-founder and managing partner of North Island Ventures, a crypto-focused venture fund with the belief that it is the next great enabling technology. Travis's journey is particularly compelling, from his early days as a lawyer who discovered Bitcoin in 2014 to becoming one of the most experienced crypto VCs in the industry. After spending 4 transformative years at Digital Currency Group during crypto's early venture era, Travis co-founded North Island Ventures with a mission to enable the convergence of crypto and traditional finance. In this episode, we'll dive into Travis's perspective on crypto as an enabling technology, his approach to building a values-driven investment firm, and the philosophy behind North Island's focus on real-world financial applications of blockchain technology. Thanks for joining me, Travis. Keen to have this interesting conversation with you. I wanted to start with, a quick background on yourself and your entry into crypto and venture capital.
Sure. So I have been in crypto as a VC for almost 10 years now. So, if you take a step back, I actually briefly started my career as a lawyer at a big firm. And fortunately for me, I really hated it. I think had I hated it a little bit less, I might have hung on for a while, but it was just an excruciatingly boring experience for me. So while I was practicing law, this was, 2014, I started looking for things in the world that might be a bit more interesting. And so I started learning about different areas of technology. And the one that really resonated with me was Bitcoin at the time. I read a book about Bitcoin and, I had some background in econ. And some of the ideas around, what blockchain could enable, particularly around payments, that I think was what caught a lot of people's interest at that time, was really exciting to me. So, in 2015, I just quit my job as a lawyer and I got very fortunate and found this opportunity to join Digital Currency Group, DCG, on their investments team in the very early days of crypto. So, that was latter half of 2015. So I've now been a VC in the space for almost 10 years.
That's amazing. It's probably quite a long time considering how young venture is in crypto.
Yeah. At the time that I joined, there were only a handful of firms in the world that were focused full time on crypto. There was DCG, which wasn't really a venture capital firm. It did other things as well, but I think we were most well known for our VC investments. And there was Pantera and Blockchain Capital, and that was really it at the time.
Yeah, that sounds about right. And, so you're an investor, you were there for, a couple of years, and then you decided to leave to start your own fund. Can you walk me through the thinking on, spending your time at DCG, some of those learnings, and then what kind of drove that decision to go start a new fund?
Sure. So I was at DCG for 4 years, from 2015 through 2019, and it was an incredible experience. The blockchain space during that time really experienced a radical transformation. We had the emergence of Ethereum and ICOs and sort of the beginnings of the crypto venture sector. So, I kind of learned the ropes there. We made about 100 investments during that time. We were the world's most active VC during that period. And so, I'm working for Barry. Frankly, I was jealous of him in that respect too. I mean, he really put everything he had into TCG in the early days and created, what he wanted to build. So that was kind of the selfish reason. I wanted to go on my own entrepreneurial journey. There were other things as well. I mean, at TCG, we were writing smaller checks. That was the model. We weren't a proper VC firm. We were really a corporate investor of sorts. It was a unique beast. But I wanted to write bigger checks, own a little bit more of the companies and projects that we invested in, and kind of like, be a bit more focused, make fewer investments. So that was a huge thing. I also think on the investment side, when you are working for somebody as a venture investor, you've got your own views of the world and your own preferences for what you want to invest in, what you think will be successful. But I think that unless you're a GP, at least part of, if not all of what you are doing is expressing somebody else's thesis and, using their filters. Because ultimately, I had a lot of autonomy at DCG, particularly after spending a year or two there, and I could pound the table on things and, get things done. But a lot of what I was doing was trying to figure out what was it that Barry wanted to invest, and were the companies that I was meeting, what he was looking for and things he would like. And as somebody who loves investing and wanted to be a real investor, I wanted to figure out what it would be like to be the one coming up with the filters and theses without this sort of complicating factor of, having another ultimate decision maker.
Yeah, that's a great point. I think that's a real reason I feel like a lot of people do leave to start their own firms so that they can kind of control exactly what they're investing in, which is super interesting that you mentioned it. And so in saying that, you started to think about this new firm. I know you have a partner in the firm that you started North Island Ventures with. Could you talk through, the thinking of North Island Ventures itself, coming up with the name and, deciding you're wanting to go into this partnership, and how should somebody think about, when they're picking a potential partner to start a firm with? It's a pretty intense job, and you're going to be with them for a long time.
Yeah, this is another huge part. Picking a partner is incredibly important. Picking the right partner, I should say. It is not something that is to be taken lightly. And for me, probably by 2018, I think that I knew at some level that I wanted to start something, and it was all about finding the right person to do it with. And so, there were others, in the ecosystem, around the ecosystem, who courted me at that time because I was so early. And I had a lot of respect for some of these folks, but it just didn't feel like there was this perfect sort of values alignment or personality alignment. Had I gone with any of those opportunities, I think it would have been a bit more transactional. It would have been, maybe they had access to capital and I had all these connections and knowledge in the space, but it wouldn't have been, these are the things that we really care about. This is how we think. This is how we want to work together. There's an element of chemistry too. And so, I met James, who's my partner, through his father, Glenn. So his father, Glenn, who's our third co-founder and our chairman, was one of the founders of Silver Lake, the big tech private equity firm. And he was an early investor and board member at DCG. So his son, James, who'd been a tech investor his whole career, had left Coatue to join the family office around 2018 and started focusing full-time on crypto. And so he and I, we met through Glenn. We went out to dinner once, and, it's kind of like one of these dating experiences. I came home and I said to some of my friends, I think I found the guy. It also had to do with synergies. I think James had, he, having grown up with Glenn and having worked at Coatue, he knew a lot about how the world of finance worked that I didn't. He also had a deep research background. So my background, as I mentioned, was in law. And I studied business before then, but, my skill set is really meeting founders, connecting with them, high level pattern matching, building partnership with them, getting deals done. Whereas he, frankly, is much better at thinking about technology, markets, business models, and big trends. Those are some of the things he learned at Coatue. And so, there were these synergies, right? That kind of like check the boxes. But I'd say that's less than half of it when you pick a partner. The other half is values alignment and personality fit. And I think the thing that James and I, really both had in common was first off, a desire to build a firm with a real long-term focus. Neither of us were particularly focused on getting rich super quick, which is possible in crypto. I think that we both were excited about the process of building a firm that could last for decades. I think both of us, it was really important to both of us to build a firm that had integrity, where we don't really play in the gray. We know what we think is right, and we really try to hold ourselves to high standards in that respect. And then the third thing is, I think we've really, we're both introspective people, and we strive to build a firm where ego doesn't get in the way in any way, shape, or form. And that's not to say I don't have an ego, he doesn't have an ego, and it doesn't rear its head sometimes. Of course it does. But, at the end of, we're on a quest to discover truth together, to do right by all of the stakeholders in our ecosystem. So, our LPs, our founders, our entire team, even the service providers that we work with. We want this to be a value creation ecosystem for everybody that we touch, a checklist of surface level items. You really have to, I think, be more focused on some of the deeper factors that are going to enable the relationship to sustain, big ups and downs, which you're certain to encounter in this space.
For sure. And I think you mentioned a little bit around the thinking of the firm, but I would love to understand the overall thesis that you ended up coming up with for North Island Ventures, kind of going into if you do look at specific sectors within crypto, how you thought about check sizing, how you thought about the number of companies in your portfolio. Would be great to kind of understand that thinking.
Yeah, so I'll talk about the thesis first. Back in 2020, when we set out, our thesis was that crypto is the next great enabling technology, that it offers a set of capabilities that the world had never before seen, particularly in combination, and those capabilities could unlock applications and experiences that could not previously exist. And, our view then was really around, finance, including things like payments and trading, lending. It was also around gaming was a big focus of ours, and, decentralized social media, things related to user-owned data. And so I think that our thesis on crypto being an enabling technology is certainly proven to be true. I think that where we are today, I look at crypto primarily as a financial technology. And that, our mission now is to enable the convergence of crypto, which remains quite segregated in its own silo, mostly speculative, but a technology that has proven its potential, and the traditional financial system, which has improved somewhat in the 5 to 10 years that I've been doing this, but which really has not benefited from the new capabilities that crypto enables. And, those capabilities are basically instant peer-to-peer payments anywhere in the world, smart contracts and open platforms on which you can design, a whole host of new sorts of financial services and financially enabled applications of the future. And so, while the thesis is around the financial capabilities that blockchain offers, it doesn't mean that those capabilities will only serve to better the financial services industry. I still think that those financial capabilities have applicability in, things like DePIN and computing markets and AI, in things like gaming and social media. But, I do think it is very important to remember that the applications are first and foremost financial. So if there's no financial problem to be solved, you really have to pause and think hard about, whether the company that you're looking at is solving a real problem.
Yeah, okay. That makes sense. And then, so how you went from that into deciding your check sizes and portfolio construction, how did you go about that?
So, I would say that in some ways, James and I are more conservative than your typical crypto investor. The space is extremely volatile, extremely, risky in many respects. And, you know, I like risk. I have, I think, in the world at large, a high tolerance for risk. I think, risk is what creates opportunity. But James and I, being very long-term focused, wanted to make sure that we were investing in a style that would maximize the probability of long-term success rather than, just merely creating an opportunity for extreme short-term outcomes while also creating the opportunity, well, extreme outcomes in either direction, right? So in that sense, we make a fair number of investments, but out of our first fund, we made about 35. This is not abnormal for a seed fund. Out of this second venture fund, we'll make, probably 40 to 45. But critically, we want to diversify across geography, across use cases within crypto and across time. So I think we've probably deployed our funds a bit more slowly than your average investor. I think historically the best predictor of success in venture, well, first it's probably been something like, brand. The mega brands in venture have been very successful. But secondly, it's been vintage. And so, I think that very much helped us with our first fund, which we raised over the course of 2020 and 2021. But we didn't deploy it ultra quickly. There were funds at the time that were getting deployed in as little as 9 months. But, our first fund we deployed across 2.5 years. This fund will be like 3.5 to 4 years. So, people talk about diversification in a lot of ways. I think for us in venture, time diversification is critically important as well.
Yeah, great point. I think a lot of people do end up leaving that out as a point of differentiation or diversification. So it's pretty interesting that you guys are thinking that, and so you have now left DCG, you're working on NIV. Can you walk us through your first kind of fundraising experience? I imagine you didn't fundraise at DCG the way it was set up. So how was fundraising for Fund 1? What were the main challenges that you experienced?
Yeah, fundraising for Fund 1 was quite the journey. We kicked off our fundraise in early March of 2020. So we did about 3 or 4 meetings before COVID hit, and both James and I separately fled the city. And, the financial world basically shut down. Nobody was investing a penny. And so from March to April, we had a few small commitments at that point, but we really didn't know what was going to happen, And so what do? Well, every day, James and I mean, there really wasn't much to do at the time because we decided that we should actually pause our fundraise rather than trying to beat our heads against the wall and just wait for hopefully things to turn around. So James and I would just get on the phone every day at 9 o'clock in the morning to maintain a normal schedule. And we would talk about, what was happening in the market, refining our thesis. We met some companies during that time, even though we weren't quite ready to invest, and, kind of improving our pitch to investors, working on our materials. And so then at really I think at the end of April, early May, we said it's go time. And, as quiet and strange as March and April were, May and June, things just started to go like this. So what seemed very unlucky actually turned out to be quite lucky. We hit the market while there weren't a ton of people fundraising initially because we had nothing else to do. We had no money to invest. And we caught momentum quickly and we got to a first closing a few months later. So, and then, we ended up closing the fund in full in January 2021. So, fundraising was basically impossible. And then it was, frankly, fairly smooth because of the sentiment in the markets.
Yeah, that timeline sounds, pretty amazing if you were able to go from April to Jan and fully close. So that's pretty cool. What would you say was the most surprising thing you learned about raising a fund?
Surprising. Well, look, I think that when you're raising money, what you're trying to do is build trust in every way, shape, and form. Particularly with fund management and asset management, people give money to people who they trust. And so, I think that you build trust by telling a coherent and honest story, being very prepared and very reliable in terms of your follow-up, keeping people updated on a regular cadence, and generally seeming organized, right? That is one piece of it. The other piece of it, which is just a reality, is that, social signaling matters a lot. So, the secret sauce of fundraising, in my opinion, is to do it in concentric circles, right? And what you do is you start with the people who know you best, who can kind of vouch for you. So James and I got, our ex-employers to invest, very early on. And then you kind of go out to the next concentric circle and you say, hey, look, these people are investing and this is how much money we have. And with that, you kind of capture as much as you can of the next concentric circle. And then you go back, then you go to the next circle, people who are a little more distant. And, to some extent, it really ties into the fundraising advice that I give founders, which is, not necessarily smack in the middle of a process, but let's say you meet an investor who might be a fit for a future round in 6 months, 12 months, 2 years, whatever it is. The absolute best thing you can do is when you first meet them, you tell them what you are going to do. And when you point back to what you said and you said, hey, I did what I said I was going to do, right? Because that shows conscientiousness, capabilities, integrity to some extent. And so, I think fundraising is a little bit like that. And the way in which you have the opportunity to tell people, to show people that you've done what you've set out to do is to show them momentum in terms of the dollars raised.
Yeah, great point. The concentric circles method, does that still apply when you're raising your second fund?
It can, but it's a very different process when you're raising, a second fund. The first fund is the hardest to raise because you are building an LP base from effectively scratch. I mean, there are people who, maybe they left a fund where they participated in the fundraise and it's not from scratch, but building the LP base from scratch is different than raising a future fund. The future fund, what you really want to do is, between funds 1 and 2 or 2 and 3, whatever, you want to be building relationships with folks who could be a good fit for the new fund. And again, what you want to be able to do is show them that you do what you set out to do. But then, you want to kick it off by gathering as many commits from your insiders as possible, And so in that sense, yes, there is this concentric circle element, which is you start with your existings and then you touch base with the new folks who you've been in contact with. And maybe then, you can try and get connected to folks who you haven't met before and close them.
Makes sense. Was there any rejection from an LP in that first fundraise that really stuck with you?
Didn't stick with me that much because I don't remember it now. Oh, look, I would say that there were family offices that I had built relationships with during my time at DCG because we had interactions with a bunch of family offices and they had, these were family offices who were very early to crypto. Right. And I think I had naively assumed because I had great relationships with them that they saw me, do what I thought was great work at DCG for 4 years, that they were like very high probability investors in the new fund. And then when we pitched them, some of them didn't get there. And some of them never even gave us a final answer because I think, it wasn't to be rude, but they had a hard time saying no to me because I knew them. It's just a handful. But the reason was, they were very early to crypto and they had made other investments directly in crypto, in DCG, in other funds. And so it really wasn't personal. It was that they had made their allocations to the space. And, these weren't family offices with, many billions of dollars, right? They were smaller than that. And so, I think what you learned is, what I learned from that is, these rejections are not necessarily personal. They have a lot to do with the financial allocation needs of the investor at that time.
Yeah, that's a fair point. What would you say that success looks like for North Island Ventures for the next 5 to 10 years?
Yeah, I mean, look, I think we're still early in building this. I think crypto has had a remarkable run over the last 10 years with a tremendous amount of wealth creation. And that's been great, because it's enabled so much development of infrastructure and new ideas and testing, but we're still in the very early days of the real implementation of this technology in ways that matter. And so, our goal going forward is to back the best entrepreneurs in the world who are building for real use cases, solving real problems in the real world. And, I know and acknowledge that there are going to be more companies that get built and more projects that get launched that, succeed without delivering any lasting value to anybody. I think the latest incarnation of this has been the meme coin frenzy, but that's not our game. That's not really what we're interested in. And so, for us on the venture side, we just want to keep doing what we've been doing, evolve as the market evolves, get better at investing, get better at supporting our founders, get better at providing our LPs with, not just a product that, hopefully has great returns for them, but also an experience that they value and enjoy. Continue to build kind of a great internal culture, bring in, more great talent that's values aligned. And so, that's what we're excited about over the next 5 to 10 years. And I think, if we succeed, it may be the case that in 10 years, there's no such thing as a crypto investor. I do think that's where this is headed. But I think that for 5 to 10 years, the window remains open for specialists in this field.
Makes a lot of sense. What would you say is one thing about being, a founder of a new firm that you wish you had known before you started?
I think I wish I had known how much I enjoy it. I think that, as I mentioned, a big part of the reason I left was to really try my hand at investing with no guardrails, but it was also to be an entrepreneur. I have very much enjoyed the process of building a firm from scratch, hiring great people, integrating them into our culture, trying to train and push them to be the best that they can be, build out our LP base, build great relationships with our LPs that I hope are super synergistic, all really build a community around everything that we're doing. I actually think, I knew that I was jealous of the people who had done things like this. I probably wasn't as sure that I would love it as much. Had I known, I might have done it a bit earlier. I might have taken the leap earlier. Although, as I mentioned earlier, you got to wait for the right person to come along. Unless you want to do it as a solo GP, which it wasn't very common at the time, not something that appealed to me. So, I think doing it as a partnership is, for me, is more fruitful. Yeah, that's the first thing that comes to mind on that question.
That's good. And the final question I have is, what's a secret obsession of yours that nobody knows about?
Oh man. When I was a kid, I used to be very obsessive about things. I would memorize baseball statistics. I was totally obsessed with baseball and memorize all the specs on all the cars that were sold in the US. I'm not that obsessive today. I'm much more of a generalist. I kind of, in that sense, I'm obsessed with knowing a little bit about a lot of things. I read very widely, I'm very interested in health and wellness, but I also love to eat, So, I would say on the whole, I'm probably obsessed with making sure that I know kind of a good amount about a lot of things, because I think the world is a hugely diverse and fascinating place.
Yeah, no, I appreciate that. And I think that definitely makes you better and better as an investor, knowing a little bit about a lot.
I hope so. It's a balance. Breadth and depth is a trade-off in this world. I personally just find myself drawn to many different things.
Fair. Well, thank you so much for joining, Travis. This was an amazing conversation, and I'm looking forward for people to hear it.
Yeah, thanks, Nawaz. It was a little different than the typical, crypto podcast I've done or investor podcast. I really enjoyed it. Thank you for your questions. And yeah, it's been great getting to know you.
Fantastic.